There are two ways you can build and fund an esports team. You can buy your way in with a big check, or you can build something from the ground up. I'm going to talk in this video about the difference between venture capital and bootstrapping a business within the esports world and the benefits and the negatives of both. First off, let's just define what those things are, because when I started, I didn't have a clue either. So venture capital is essentially a big business with lots of money, a big investment firm with lots of money that will go, I'm going to put a check into your business. So we're going to put here, so you've got VC for short, you'll hear it a lot. And that money will range from £2 million, probably, usually, all the way up to, let's call it £200 million, right? Big range. But they generally will not invest for less than 2 million, is what I found. Some will put less in, but generally, if you're looking for investment for less than 2 million, your route is actually a third route, which I didn't start called angel investment. And I'll just say a little bit about what angels are. Angels are individuals, right, who like something, generally a bit easier to get, but their check sizes are smaller. These will range from something like, call it 5K to probably maybe 100K or something. An angel investor is a wealthy individual usually who likes to have some fun, but also make some strategic investments into stuff they're interested in generally, or could add advice to, right? So, but generally for esports, this isn't enough money and it's hard to fund an esports team off angels. So you need VC or you need to bootstrap. So bootstrap basically means that you personally fund it. This is the route that Endpoint took. So Endpoint is my company. We've been running Endpoint for 9 years and we now have 5 different companies. We're Sheffield based with a 4,500 square foot facility and we bootstrapped that. In about year 7, we took a little bit of angel investment to help with some of the development stuff we did, but we've never gone down the VC route. So bootstrap wise, we funded our own money. So me and my business partner, Adam, both have full-time jobs. I was a professional poker player. Adam was a software developer. And we basically put money in every month for 3 years. So for 3 years, we stuck money in every single month while doing our other jobs until we made the business profitable to take the risk to go further, right? So that might take a long time for you. That might be like, I need something quicker than that. You can do it quicker than that, but at the same time, you know, it's a long game in some ways if you can see in the long term, which is hard to do, but long-term viewership is really good, right? So for VC, what does that mean, right? So the benefits and the negatives of VC money. So what does a VC expect? When a VC invests into esports, this will give you get a top tier team, which is great. So a top tier team will give you all the eyeballs, it might get some sponsorship interest, and you can actually grow socials pretty quickly, but you will also be pumping money quickly, but that's why you raise a lot of money. But a VC generally in a fund expects to 100x their investment on your business. So they'll invest into about 10, 20 businesses maybe in a fund, and maybe 80 to 90% of those will fail. But then they'll expect one business or 2 businesses to have a unicorn and grow 100x. If your business can't grow 100x, they're generally not interested. Because if you say to them, I can grow your business 5 times, it doesn't cover the rest of the fund. They basically need to try and make sure that one of their unicorn businesses will do that, which also puts a lot of pressure on you because if you're not growing fast enough, they'll try and get you out of your company or anything like that. But also if you want to be $1 billion company, this usually is the best route to go and the quickest route to go as well. Again, within esports though, this means you could go, I could pick up a top 10 team in Counter-Strike, right? Top 10 CS team. I can make the majors, I can get my sticker money, I can get the whatever, but I'll also be paying a wage bill of like 100K a month or something crazy, straight out the back, maybe 200K a month or 300K a month for the top 10 actually. So, whereas in the bootstrap way, you need to be, in my opinion, it's a lot slower. It took us a while to get recognized, but what way we did it is we made sure we were at least the best at something. So we were the #1 team in the UK for CS, right? We did that for years and we won lots of trophies, we got recognized and we slowly got a good reputation for a few things. One of them was paying our players on time every single month, which sounds like a standard thing in business. Unfortunately, it's not in esports. But that was one thing, but we also won all the domestic trophies. We won 10 ESL Premiership titles, as an example. I spelled that wrong. Premiership titles, right? So that was a really good way for us to bootstrap, and we got known in the UK as the go-to place for Counter-Strike. Off the back of that, we built a business as well with grassroots, tournament organisers and everything. So we essentially are known for UK Counter-Strike and Rocket League as well and other things now, but that's how we started. And we slowly did it over 3 years to get to a stage where we managed to find a partnership with a company called CEX, who are a retailer, and we went from there as well, which really helped us. But it took us a long time to get to that stage. And actually, it wasn't was it 3 years? Yeah, 3 or 4 years for that. VC money, again, a lot of pressure, push to profitability, but also just push to scale. It's just all about scale. They're the difference, essentially. And it depends whether you want to build something different or not. So VC money, I'll give you real examples in this as well. So for me, it's about whether you build from a top-down, so this is a top-down model, really, or a bottom-up model, right? What this bench means, top-down will mean you're pumping money into something to buy your place in the industry, essentially, which can work. It definitely can work sometimes. But let's take an example of Guild, for example, here. Guild used the top-down view. They got investment from investors, famously David Beckham and other people, but 40 million straight into there, top-down. And if you look at their engagement, it's not really there. They haven't built a community, which is key. They put a load of money into influencers and pro players and all that kind of stuff and overspent, and they soon ran out of money, right? So this is the top-down approach, and the bottom-up approach essentially means you build a community first, you build a base of fans and people that trust what you're doing, you tell a story. So story is actually really key with this one. Obviously you can tell a story over here as well, and you've got more money to tell it properly with good equipment like this. Or saying that, I'm using a phone to record this, which we do have other equipment, but again, I don't want to waste too much of my staff's time for this. So yeah, we've got story, and you get fans that come along your journey, and when you do achieve something later, like these 10 ESL premierships, or this partnership with CEX, or become the #1 team in the UK, people respect it more, and they feel like they've come along your journey. And when you get to the stage where you've waited, we're in it 9 years and we're getting opportunities coming through the door still, it's almost like we're a startup still. But long term, we built a fan base and a community of people that trust us, versus a faceless VC sometimes where they're pumping money in. And generally, the big thing here is they want an exit within 3 to 5 years, right? You could take another example of this of someone like Excel, who got a load of VC money in. They managed to get the LEC spot, which was the smart way of doing it in League of Legends. But there's been a few VCs that have come through their company. And actually, weirdly, over the years, I've known lots of great people that have come through Excel, but I couldn't really tell you anyone that works there anymore. Even though they're the biggest organisation in the UK, I don't really know who they are. And I think that'd be the same for a lot of people. They think they don't know who the people behind the brand are. And I think in esports, people like to know who people are behind the brand. Not necessarily the same as if you're like a big startup, like a company like Snickers that I used in my last example. I don't know who owns Snickers, but probably don't need to know either. So that's the big trade-offs. We have organic growth, you build a community. I prefer this route. It just takes a lot of time, a lot of time, and a lot of headaches, a lot of mental resilience to actually not go, lose it, versus the VC money route, which can also be very hard because your business plan has got to be good. They're not dumb. They don't just give you money. We did look at this route at one point. It's very hard to do. Anyway, if you're interested in this kind of content, we're going to be covering all sorts of esports subjects. Plus a sub.